Okay, hello members. LA here. It is October 19th. This is the weekly review where we try to take and look at what happened last week and put it in context with respect to what do we expect to happen this week. This particular week, I'm going to actually spend some time looking at um, kind of the situation in terms of tops, how they form, how this one might be a top, and try to put it in context because, when this market really started to decline this week, I got a lot of questions about are we going to crash? And, crashes don't take place typically that fast. And as a matter of fact, if you go back and look at those crashes that have happened before, they almost always take at least 2 or 3 months to form at the least. 2008, for example, took over a year. So, let's try to put it in context and understand where we are, and I'll try to do that as we go through this today. So anyway, last week indexes, they were down. They ended up not that bad. They were down a lot Monday through Wednesday. They, washout Wednesday is what was happening. I wrote about it, speculated that we might be washing out. Thursday, a little bounce. And then Friday, of course, we had the move back up. And so S&Ps, we start down. That was the washout type move. Tested again that morning and then shot up on Friday with a gap open. That's kind of the way the week played out. And, so the damage overall really wasn't that bad. But what we really should be thinking about is not so much, what happened last week in terms of that. I mean, now that we've had that washout and the bounce, it's really what do we watch for next? What's coming up? What is it that we can expect to take place? Because we've already transitioned on all the indexes on the weeklies now, with the exception of the Dow, and that's part of what we want to look at. We want to look at the things that have been strongest of recent and the things that have been weakest recently and see how they are playing out and what they're coming up against, and use those clues to help us make decisions about where we're going next. I mean, that is what it's all about in NEO, right? You're trying to look at any kind of clues the market gives you to try to understand what's coming next. And so when I think about it from that perspective, the Dow was the only index that didn't break down. Here's the daily. It didn't break down on the weekly if I pop the weekly up. So you go under, you close back over that low. It was actually kind of the second test of that retest regen off that high, and it actually closed under it. So that's a negative. You pushed into it with a little bit more volume. It was more volume than the breakout bar as well. So you can see you're pushing down with volume on the weekly, but it didn't break yet. On the daily, you're actually coming back up, and these are the sorts of things that we want to be looking at on the way back up this week, right? As these bounces take place, you'll want to take and measure the retest regenerates on these various indexes and sectors and see how they look. So as the Dow comes back up, volume's pretty heavy compared to what it did here, but you also need to compare it to what you broke down with, and again, it's more heavy there. So I think this Dow is going to try to get up into this area. It's going to get it right up there and try to do a full retest, regen, and that's going to be the key, is can it get over it? Right now, this has been, or is, shall we say, the strongest of the indexes. Now, the NDX had been the strongest up until recently. And then when it crashed down, crashed in terms of a fast move down, the bounce up doesn't look nearly as strong here as it did on what we just saw with the Dow. And if you do the retest regen on this one, what you're going to see here is it actually got into it. Volume was a little bit heavier, of course, than back here because there was no volume back there. But you're looking at these breakdown bars as well. You can see the volume coming back up, not nearly enough. I don't know if this one's going to get much higher or not. Now, it may not, but right now, this is one that if it were to get up here, it would really mean something. Because right now, it's struggling, and it's struggling in a big way. So the retest regenerate is coming, and so far, given Friday's quote-unquote failure into that, it looks like it's going to try to reverse and regenerate lower. Now, the Russell had been the weakest index of all. And the Russell, of course, came down fast, much more fast than everything else. And, of course, it outperformed this week. And some were surprised, thinking it shouldn't have done that. But, it had already done its downside, and now it's time for the others to try to play catch up. So the Russell's coming back up. Two big old bars here as it's coming in two big wide price spread bars. It does wide price spread all the way up, volume tailing off as it's going up. It gets up there on Friday and it reverses and actually closes lower while the rest of the indexes were up. Didn't even get to the retest regenerate zone yet. And so this one, even though lately it's been the strongest, back here on Friday, it started to show its weakness again. Now, if you think about what's happening, if you were invested in anything in the Russell, and you go back over here and you look at the weekly chart, this thing had played out a year in this topping pattern, and we're going to talk about topping patterns here in a bit. But it was almost a year of this kind of over, up and down type action as this thing played out, with these little rolling ups and downs and big ones here and then eventually rolled over, right? Anyone that bought over the whole year, a whole year now, anyone that's bought the last year is underwater. And as this thing comes back up, what do people always want to do? They want to get back to even. So anybody that bought probably in this range, which is about half of that time, is going to want to try to sell in that range and get out for even or get out for a small loss. Nobody wants to ever take a loss. That's typically the way most people treat trading. That result, of course, makes this huge resistance on the way back up. Big spike down. As I've talked about before, you got big volume on the bottoms all across the board anymore. I think the Russell, once more, is trying to tell us that it's going to be a tough road back to the top side. And that's one of the reasons I believe that these indexes are going to work out ranges instead of straight up, straight down type stuff. So that's what the Russell looks like. And that's, of course, what we want to watch. We want to see, does it get back up? It's already getting up here on a retest regen on the weekly, and I didn't draw that in, so let me do that. This is a retest regenerate on the weekly, and it's happening immediately, so it's about a 50-50 chance, although it broke multiple swing points. So if you think about that, you've got multiple layers you've got to cut through on the way back up. There's lots of them. And the most important one is probably that last one up there, because if it were to get up here, it would be a totally different story. Now, if it can get up there, hats off to it, because that would say that you've cut through all that resistance. About half the buyers over the last year, you've cut through it all. That would tell you something in a big way. So that's the sort of thing I'm looking at as I'm looking at these charts and saying, okay, tell me, are you going to buy this thing, or are you really going to try to dump what you got? And this typically, when it starts to break down, is what you would say is a distribution pattern at the highs. And we'll get into that a little bit more as we start talking about, tops and crashes. Another, now that's the indexes. If we pop over to the sectors, right, there's some sectors that we can look at too this week that will give us some clues as well. One that I've started following a lot is the IBB, because it seems to be a pretty good corollary with the XLV. IBB, now this one actually showed some good strength. It's a high beta stock though, so this big spike up, this big wide price spread bar spike up, I'm sure a lot of that was short covering. But at the same time, there was a swing point low here that it overran on that spike up. Let me draw it in here, right there, and got over it and stayed over it. Now, what I want to see as a quote-unquote bull is I want to see it stay over it. I want to see it keep up here, give me at least 2 bars, maybe 3. If it fades right back into here, then this being a high beta, right, the volatility that's in this market right now, these gyrations are large, and it can certainly go over and back under. So I'd like to see a couple bars up there to make it, prove to me, so to speak, that in fact it's going to hold. Now, one of the other things I've talked about before, and I know it gets lost because there's a lot to keep track of, but if you go to the weekly chart and you draw in the weekly swing point high as you're coming down, what are you doing? You're testing into both of these weekly retest regens, right? The bullish ones to try to go higher. And so as this comes down, the pressure on the downside here is mitigated to some extent by these two retest regenerate bars that's trying to regenerate higher and push it back up this way. So you really have to try to look across your multiple time frames to understand, is there really, a mitigating factor, for example, so to speak, right? And in this case, there are mitigating factors on different time frames. So when we look at it that way, that says this thing really should be one of the stronger ones, which it is. And if it can't get higher, that's a big thing. That's something that tells you something. IYT, same sort of thing. You've got, one of the strongest sectors popping back up. It got over, same idea, back over this retest, regenerate zone. Those are the two that are over it already. I'd like to see this one stay up here, right? This one has volume at the bottom, so I don't know if it will. And you've also got all the Ebola scare still going on with airlines. The other one is the financials I want to point out. So if I pull over and bring the financials up. Now the financials have been sold on their earnings. This one's spiking up to swing point lows, testing it now. This is a big tell too. Now this is a low swing point low. In other words, it's way down here. So, if it holds, that's also going to be big news. And when we get a little bit later in the show, I'm going to show you how the earnings have fared this first 10 days or so. So that's that's what's happening there. That's what I would be looking at. There are some positives. If we come in here and look at it, the XLP, it's already refused to regenerate lower. And there's these four others that are testing or either over the retest regens already or testing now. The biggest thing is this has been a bull market for a very long time, folks. It's highly unlikely this thing is just going to fold and crash. It's much more likely, even if we're putting in a top, that this first serious downturn in 3 years, plus 3 years now, it's going to take a few weeks or months even, to build out some sort of a base. That's generally the way this thing happens. So, keep that in mind. These things, I know that we all think everything's going to happen real fast. Well, it doesn't. It takes time. Yeah, you get these big spikes up or down, but in the big picture, when we start looking at weeklies and monthly charts, it takes a long time. As a matter of fact, if I pop back over, just to quickly give you a feel for what I'm saying, this looks pretty dramatic. Of course, when you pull it back and you look on the weekly, it's still dramatic, but not nearly as bad. If I bring up the monthly, it looks like a blip. So we got a little blip. Who cares? Right? We've had little blips before on the way up. Is this just another one? So, you have to, put it in context, because depending on what you're looking at and what your state of mind is, it's going to look a lot different. So tops take a long time to form usually after a long bull market. They don't just happen in a matter of days for sure, or even weeks usually. Usually it's months, right, before it can happen. Now they can take many forms, and I want to show you some of the prior tops and what they look like. So if I pop over to some charts I have, this is 2008 when it crashed. Right now, you have to remember in 2007 it had already topped over here somewhere, at the highs. They were much higher highs, and this was the bounce. This bounce came some 10, 11 months, actually it was about 10 months. The top was in September of 2007. So you can see we're getting a rebound 9 months later. and then a test down, and then another rebound that gets up there and fails at the highs, fails on a retest, regenerate off the highs, eventually does a swing point low break, and then all these break here on this one. So you get one there, you get those, and then if you remember, this went all the way down to what, 666? 50% off of this. That's how major crashes typically happen. You know, they take a while to form, you know, and then you get some signals along the way that you can read, right? And you can see that, you know, when they line up, how many times have we talked about this? When they line up like this, right, all down here kind of nestled together, you know, the risk becomes much greater, and you have to realize that, just like we realized at this time when the S&P was still 1% at the high, but the Russell was telling us, you know, we don't have to look at just one thing. We can look at multiple things to give us clues. And so that's, you know, the 2008 top and how long it took it to play out. Here's the 2000 top. This one actually, this is in 2000. The highs were made back in March of 2000. The real crash came later, but right here was kind of the key area. Now, March was the highs. This didn't break until August. So you're talking about 1, 2, 3, 4, 5, 6 months, 7 months, about 7 to 8 months later. So you can see how long it takes for these things to take place. Now, the 87 crash is kind of an anomaly in that it didn't take nearly as long, but still, even there, you know, you had the signal to get more cautious, just like as we did here. You know, you tighten up the ship, you get rid of things that are trades, you get down to just core positions, and at least that way you're not going to get killed if something major happens fast. Even here, the top was in August. The crash took place in October, so you only had 3 months. You came up, you came down, you broke a swing point low, and again, just like we talked about, there were multiple swing point lows underneath there that were not too far apart. And so when you saw that this thing had, you know, started to crash here, volume expanding tremendously, it was a good sign, right? And this one, although it crashed fast and furious, it still gave us a sign, and it gave us, what, you know, 3 months from the top before it finally gave up. So we just had a top 4 weeks ago. You know, if we look at the current charts and bring up the S&P here and put it on a weekly, we're talking 4 weeks ago we were at highs. And basically 5 weeks. You typically don't get, you know, a crash 5 weeks along. If we had a daily chart up here, and I should do that at some point, you would see the same sort of pattern taking place here, in that you would have seen much more signals on a more granular time frame, in other words, our daily, than you see on that weekly. And that's just what you're seeing here. So now, if this were to be another 87 type crash, you know, and anything's possible, you know, it's still going to take it a little while to play out, and there's no reason to think it's going to happen overnight. It takes a while. So I wanted to just kind of lay out that idea. Now, the other thing that I wanted to talk about, and I'll just bring it in here, is, you know, when you're looking at market cycles, and I had a member send this to me today, and I thought it was great, so I incorporated it into the piece today. This was Anna Cooling, The Complete Guide to Volume Price Analysis, a book that was written. This is one of the figures out of the book that he sent me. And what was really interesting to me is that I agree with most of this, but not all. And I wanted to kind of go through it real quick with you. You know, there's kind of 4 phases, they say, to the market. There's this accumulation phase. There's eventually a markup phase, some sort of a distribution phase, and then a markdown. And that typically is the pattern. I mean, that is the way it works. So, you know, if I'm a large institutional buyer, I'm going to be accumulating down here. This is where I want to be buying the bulk of what I'm going to buy down here. So this can take, you know, 8 months, a year. It can take a long time at the bottom. And if you look at the bottoms in some of these charts, you'll see some sort of an accumulation taking place in some sort of a larger range, and then eventually a breakout, volume expands on the breakout usually, and then you get into this longer jagged uptrend. Eventually you're going to top, and when you do, it's usually going to distribute. In other words, it's not going to just crash back down. Why is that? Because there's big operators in the market that want to hold it up long enough to get rid of everything. Now, in this particular market, it's been very interesting because that distribution, one could argue, it's been going on. And so if I look again, and I'm going to bring up the weekly chart here, even though this looks like a steady uptrend, if you take and put this in a different context and think about it from this perspective, right? From this time frame on, right, that could be distribution that's taking place. So in other words, from about April of this year forward, we may be actually seeing distribution. And later on, if this market really does end up coming way down here, one could argue that this whole period here is distribution, and it's probably going to go on another 3 or 4 or 5 months maybe. And so you could get a large distribution period just like you see in that graph, right, in the S&P. Now, that, as we've already looked at on the Russell, it certainly appears to be what has happened on the Russell. And on the Russell, because it's been going on for a long time, you can see it on the weekly chart. So think about this on the Russell, and we don't go back on this chart far enough back to see the accumulation phase, but you can kind of see the markup phases, especially here, right? And then one can wonder, is this distribution up here? Is that what was happening up here? I mean, that's a whole year of distribution, if in fact this thing starts to come on down, right? And you never know those things until later, right? You're not going to know that now. All you can do is speculate as to what's happening, and you have to get off the long-term stuff and come to the shorter-term stuff to try to understand is that's what's taking place or not. And so when I look at the weekly chart, it certainly looks like some sort of distribution pattern, but we won't know that until we see that the sellers, right, those people that have been distributing, if they have, what are they going to do? You know, if I'm a large operator and I've got, I don't know, $2 or $3 billion worth of stock, I can't move that in a couple days. It's going to take me 6 months to get out of it. And what do I do in the meantime? I'm gonna try to keep this market up here, and I probably got my buddies who are managing 1 and 2 billion themselves doing the same thing. And how do they do that? Well, they keep putting out press releases. They keep buying at the bottoms, right? Making these things spike up so the public or whoever is a smaller and a little bit, not as wise as to what's going on, buys. And they all accumulate up here, whereas the big guys are distributing it to them. They're handing it to them. Now, if that's true, that markdown period is where this thing really starts to move, and it moves fast. That happens as this accumulates in here, and the people that have been distributing say, oh, that last let's say I had 20 million shares. That last 2 or 3 million shares I just didn't get rid of. What I'm going to do, I'm going to dump them. I'm just going to try to get rid of them, right? Because I'm not going to get the best price anymore. I'm going to get rid of what I got left. And when they get close to that, that's when you see the mark down, right? The fast moves to the downside. I don't think we're there yet because this is the only index that looks this way. Now, it may be happening now, and it may take another 2 or 3 months or another 6 months or whatever to play out, but that's the ideal behind this whole thing. The thing that I disagree with here is this buying climax. I haven't read this particular book, but they got this highlight here and they show a spike down and back up. I don't know what that means. To me, the climax, when they've accumulated, because think about it, they're going to do two things. On the bottom, they're going to sell these tops. They're going to keep the price down as long as possible while they build out their line. And when they get up here, they're going to buy the bottoms. They're going to run in there and they're going to spike this market back up to make everybody think, okay, it's going to go again. Right? Train's leaving the station. You got to get on. And so the large players, that's the way they trade this thing, because it takes them 5, 6, 8 months to get into the positions. It takes them 5, 6, 8 months to get out of them. And they've got to have these kind of patterns, and then they ride these, and then they start all over again. And so, this I don't quite understand it. This I understand in that you climatically crash, right? I'm not sure what they meant here by the buying climax. So anyway, I think that's useful to go over and hopefully help you, think about the market in a different way. Okay, so world markets, it looks to me like they're going to try to bounce a little bit more. There's some longer-term retest regenerates happening on some of the indexes, world markets, that, again, extenuating circumstances probably going to hold it up. Fundamentals, economics, earnings, a lot happening here this week, especially on earnings. You got like 200, I think it was about 220 companies. They're all listed down here for you at the bottom. If you want to, if you want to look up your company, you can get them online too. I just threw them in here for you. But there's a lot of earnings the next 3 weeks. It's the bulk of the earnings season, something like 60-70% of the stocks. So, this is the meat. And we're going to talk about earnings here in a second with a different, chart. And I just want to show you, what's happened the first 10 days in terms of earnings, because one of the things I always do, and I'll show you what I do, is I try to get a feel for what is doing well and what isn't. And so last week we had the Fed speak that bounced us higher. That was the big news last week. My hat's off to, Yellen didn't say anything, but my hat's off to the Fed. They were able to, get the spike going. They come in there and soothe the markets, right? That's their job. That's what they do. My hat's off again on a different different idea. I'm a big fan of Charles Kirk. He's a good buddy of mine. I always read his material. I share my material with him. He does with me. He was he mentioned this conference, the Robinhood conference that's up in the Big Apple. I had overlooked it. I forgot it was this week, but I saw it was in his notes, so I just pointed it out to you. I don't think it's make a big difference in the market, but it could make a difference in certain stocks, because there's all these hedge fund managers that everybody looks up to that are going to be talking about what they think is happening, and that can move sectors and stocks. The real story, of course, is earnings. Even good reports like Intel, they can hardly lift. So far, there's been a month of, so far this month, there's been a dearth of post-earnings trades that are buyable. There's a number of them, but, it's nothing huge yet. It's about half and half of the ones that I think that can carry to the downside, carry to the upside. And I think you know what I'm talking about. In other words, if I come over here and bring this up, and let me pop up here so you can see it. If I come in here, do my watch list, and if I'm in my watch list and I pull up the earnings, and this will be down here in the shared list for you down here. But if I put up my post earnings, and I'm going to have a video coming out I'll share with all of you pretty soon. This is where I put everything that I go over every chart every day that has an earnings, and I flip through them and I see what they look like. And if I think they're going to hold, for the next month and rise, they'll come in here as a bullish stock. If I don't think they will, then they're not going to get in here. I'm not going to put them in. If they look bearish and can hold for 30 days on the bearish side, I stick them in here too. The idea is stocks that report good earnings are generally going to hold up. And those that report bad earnings are usually going to get beat up for the next 3 months until the next earnings season. So they kind of get in a doghouse. And the other ones get up on the pedestal. And, you don't want to buy the ones in the doghouse. And you don't want to sell the ones that are on the pedestal. So, if you're looking at a stock, you want to buy it, you ought to come into that earnings, post-earnings, and see if they're in there or not. So I've taken, one of the things I do is I look for patterns in these to see, what is getting bid up and what isn't. And so far, this is the earnings that have come out so far this month. And if I look at them, the bullish ones I put up here at the top, I've sorted them by that. And I just simply extracted this from that list I just showed you. And you can do the same thing. You can sort it any way. There's about 6 more fields. I cut them out. I just wanted to see what sectors, right, what industry groups are doing well. It's scattered on the bullish ones. There are a couple here. Maybe I can highlight those as well. So there's a couple semis that did well, a couple business services, and everything else is kind of scattered. So no real patterns on the bullish side. The 2 patterns I see on the bearish side, banks selling off, right? And the other ones, and here's some more, and the other one is chemicals, right? The chemicals are getting sold down. So those are 2 patterns. I don't want to be in those sectors on the long side. As a matter of fact, if we get a better bounce, these are the sectors I'd want to probably short. So that's kind of how you can use post-earnings plays to try to help you understand where you want your money and where you don't want your money. Okay, so that's that. There's a bunch of PMIs coming out on Thursday. That's most of what's happening there. Geopolitically, Hong Kong hasn't gone away. Those guys are tenacious. The students, they're hanging out there. They've tried to clear them out 3 or 4 times now. They're still hanging out there trying to block roads. Russia's starting to, say they're going to pull the plug on the gas exports, and it's all about Ukraine, of course. And there's still fighting going on in eastern Ukraine. Nobody talks about it, though. It's not highlighted. And ISIS, of course, getting all the news here. These guys aren't going away either, and I think it's going to be boots on the ground at some point. Oh, bottom line. I didn't give you a bottom line. Well, let me give it to you, and then I'll put it in the notes for you. The bottom line to me is that what you're going to see probably for the next 2 to 3 weeks is you're going to see a range build out most likely. And what I mean by that is if I pop back over here, let me pull up the S&P 500, and I want to use the weekly. So let me grab that. You're probably going to see some sort of a range, set up. And what I mean by that is if I take this top, that's a higher range. And if I take kind of an equidistant, it's a little bit bigger. Actually, I didn't draw that very good. Let me draw it one more time. So if I get back up here, about there, and then I do the same thing down here, right? You can see those are almost the same. And then if I go all the way down here, there's potentially another one. The question is what is it going to do here now, right? That's the way these things usually set up, right? You're kind of in the top floor, you drop down. Now you're trying to get back up there. These things usually coincide with key areas, like in this case, there's a retest regen zone here. That's going to be tough. And if you look at it on the daily, there's one there as well. Those are going to be the key areas that the battles take place, because if I bought up here and I'm coming back up and it doesn't look like it's going to get up there, I may take a small loss to get out. And so there's a potential that the sellers overwhelm the buyers on the way up. And we won't know that until we see the test. On the flip side, you got big volume now at the lows. So I do expect that at some point we're going to come down and test these again. And if you look at this, and what was really interesting when I was looking at it, if you look at this low, 1820.66. If you look at the high of the previous low, 1798. And then you look at the low over here, right? There's the low here, there's another swing point low over here. That one's about 1770, 1768. This area becomes the battleground on the way back down. And the TA Today shorts charts actually show it that way, right? That's really where the support is now. So I doubt this is going to get broken anytime soon. I doubt this is going to get breached anytime soon. So I suspect what's going to happen is over the next 2-3 weeks, as all these earnings come out and we see what they are, we're going to range trade in this big range with a lot of volatility potentially still. And that's probably where we're going to live for the next 2 or 3 weeks. So that to me is kind of the bottom line. Looking at the portfolio, we're down almost 10% on the market last week. It was swift. When those things happen, you really don't want to be in much stock. Fortunately, we got out of most of it. We still got stopped out of some more. This week, SBucks, we made pennies on it. This we took a loss again. Google reported earnings on Thursday, didn't do well. The management talked down this, expenses, because that was really the issue in their earnings as being temporary, but the market, at this phase, market doesn't care. They sold them down anyway on Friday. We're very lightly invested here. And I think we should stay that way until we see this range either get towards the top extreme or the bottom extreme, and then that's where we're going to want to try to do something. Initially, when you're trading a range, and let's just assume that range is going to be in here somewhere. When you're trading a range, it takes a while for it to break one side or the other. And as it does it in here, in this time frame, you can sell the tops, buy the bottoms. Now, the long-term trend on this market has been up, but this was a violent move on the way down. And so I believe, given this, I believe you can actually do both. You can sell the tops and you can buy the bottoms for the near future. And then after that, you got to get a lot more careful, because eventually it's going to break one way or the other. And so initially, the trades are sell the tops, buy the bottoms. And so what we want to do is see how this market trades. And if it trades back up to one of those extremes, then we try to do something with it. Otherwise, we should just try to be safe until we get a good read on which way this market's going to try to break. Let's look at the portfolio right quick. There's not much in it. We got 4 stocks at this point. The first 2 doing really well still. AWK, they report earnings in I think 2, maybe 3 weeks. So they'll be coming out, and we'll want to look at those, when they come out. So that's in 2 weeks. Facebook, here's one of those extenuating circumstances. Look at all the swing point lows it was trying to break, and it actually did break here and went bearish. But if you look at it again on a weekly, what was it doing? A retest regen into this high volume breakout here, comes into it with less volume on the test, flips around, goes back the other way. Facebook reports earnings next week, I believe, and so that's what's happening with Facebook. Zeltiq is doing well, still holding in here. This reports earnings in a couple weeks. We don't have, but our portfolio size is like 20% now. So I'm not that worried about trying to protect these with tight stops. When you got a 60% portfolio, you have to do that. We sold down to 30% before everything went to heck. So, the last 10%, yeah, they took our stops out, and that's a cost of doing business. But if we preserve our capital, we'll be in good shape when we finally get a better signal, and we just want to play the extremes in between. So Zeltiq, we'll just watch it and see what happens. Google sells down, volume expands, tried to trade higher, eventually gave it up. If you look at it on the weekly, it looks to me like it's going to try to come back into this big bar. So this last time it spiked up, top there is 507.74. I wouldn't be surprised to see it get down in this swing point low and this high. So this little area here. So right now I don't even have a stop on it. As this week develops, we'll see where it wants to bottom out, and then we'll be able to put our stops in again. Google is probably trapped in this general range for the next 3 months. And so on Google, we may try to sell some at the highs and buy it back again at the lows as we go forward. Okay, so long broadcast. I'm going to leave it at that. Hopefully that's useful. And as always, I'm here to help you. Just holler if you need something. Thanks a lot and take care.